As an investor, if you want to invest in stock market, then you have two options. Either you invest your money directly in stocks or you invest in equity-based mutual funds. But these days, you might have heard about small case investing. So in this video, we will discuss what exactly is small case investing and how different it is from mutual fund investment. Hello everyone, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. We will first start with understanding the context behind small case investing. Then we will discuss the company that started small case. Then we will discuss the various examples of small case, how it works, the fee structure, who manages the small case, various collaborations, and finally we will identify the difference between mutual fund investment and small case. Many years ago, investors did not have the option of mutual funds. They only had the option of investment in the stock market. Now, stock market investment had its own set of risk. Moreover, it was difficult for the retail investors to identify the quality stock and enter and exit at the right time. Then came the concept of mutual funds, where the fund manager will pool money from investors and invest in a set of stocks rather than a single stock. This would provide diversification and reduce the volatility in the return. Moreover, the investment is done by experienced professionals whose entire job is to do research and identify good stocks to build a nice mutual fund portfolio. Now, the major categorization of mutual fund is based on market cap. For example, you have got large cap mutual fund, mid cap mutual fund, small cap mutual fund, etc. So for example, if a mutual fund is a part of large cap category, then minimum 65% of the investment would be in a large cap company. It would include companies from various sectors. But then in 2015, 3 students from IIT Kharagpur came up with an idea. They thought, what if the investors get an option to invest based on a specific theme or a specific idea? And they started Small Case Technologies. Let us understand more about the company. Founded in 2015, Small Case Technology is a fintech company that allows retail investors to invest in the stock market of India in a portfolio-based approach. Think this way, you don't buy one stock of a company, but you buy an entire bouquet of stocks based on a specific theme. For example, a theme could be rural demand. Now you will get a small case which is a bouquet of stocks that fall under the theme of rural demand. Since inception, small case investing is one of the fastest growing companies in the fintech space, and it is backed by investors such as Sequoia Capital India, Blume Ventures, etc. Recently, HDFC Bank has also invested an undisclosed amount in small case technologies. So far, they have collaborated with many top brokerage houses. Zerodha was the first company to tie up with small case. Now there are many brokerage houses like HDFC Securities, Kotak Securities, IIFL, 5paisa, etc. In order to invest in small case, you would need to have an account with any of the broker that have partnered with small case. For example, if you have an account with Zerodha, then you can log into small case via Zerodha credentials and invest in the small case. You can either select a specific small case based on the theme or idea you like. Small case provides the opportunity for financial planners or research firms to create their own small cases, and you can choose your small case for investment. In fact, even you can create your own small case and invest in that with a single click rather than buying every stock individually. Now this is helpful for those who like to invest in a set of companies every month. So basically, you've got two options. Either invest in your own small case or you invest in one of these specific small case already provided. There are many small case based on various themes or idea. If you just Google small case technology, you will get the first link. If you click on this, it will ask you to log in. You just click on this. Here you will have various options of broker. So for example, in my case, I've got account with Zerodha. So if I click on this, it will ask for the password. Now you can enter with the credentials of Zerodha. Now this is the main screen of small case. In order to discover the small cases, you need to click on this tab, and here you need to click on all small cases. So here you can see all the small cases like all weather investing, equity and gold, low risk smart beta, quality smart beta, and you can see all details. For example, rising rural demand, specialty chemical, top 100 stock, etc. Now if you click on any of the small case, you can see all the details. So for example, this is a small case for specialty chemical. If you want to see the details, you need to click on the stock and weights. So here you can see what all stocks are there in the portfolio. For example, it includes Aarti Industries, Advanced Enzyme, Vinati Organic, Fine Organic, etc. You can see the market cap distribution, large cap, mid cap, small cap. Now the point is, here you need to make a minimum investment of 52,965 rupee if you want to invest in specialty chemical small case. If you want to see who has created it, then click on overview, and here you can see created by Windmill Capital. So Windmill Capital is a research firm that has created this particular small case. Small case are managed by financial experts and research companies. You can click on each small case and see who has created the small case. They also rebalance the portfolio periodically. So the small case investment amount would depend upon the portfolio. Now this is very important. Please understand this. For example, if a particular small case has a total of 15 stock and the minimum amount of investment in that small case is rupees 15,000, then you need to shell out rupees 15,000. Tomorrow there will be changes in the stock prices, or the small case would make changes in the portfolio by removing few stocks and adding few stock. In that case, you will have to adjust your investment amount accordingly. The charges would vary from broker to broker. For example, if you invest in small case via Zerodha, you will have to pay rupees 100 to buy the small case for the first time. In addition to this, you need to pay the stock investment charges as usual. For example, if there are 10 stock in the portfolio of small case, then you will have to pay the charge just like you buy or sell stocks on Zerodha. For example, there is a STT, that is Securities Transaction Tax of 0.1%, and then demat charges on sale of every stock in the portfolio. In mutual fund, when you invest in a fund, you buy units and not the individual stocks. In small case, you buy the stock rather than the unit. For example, if there are 10 stock in small case and the total price of one share of each stock is, let's say, rupees 25,000, then you would need to invest a minimum of rupees 25,000 for the small case. Whereas in mutual fund, you invest as low as rupees 500 irrespective of the stock price. Mutual funds are managed by mutual fund managers of respective fund houses, whereas small case are managed by different entities including research firms, financial planners, etc. For example, if you invest in Axis Blue Chip Fund scheme, then it is managed by a fund manager working in Axis Fund House. You can also check the detail of the fund manager. Likewise, you can see who is managing the small case, but in case the small case is managed by research house like Windmill Capital, I could not find the fund manager details. Mutual funds predominantly have categorization based on fund size, whereas small case portfolio is built on the theme or idea. As we discussed earlier, mutual funds are mainly categorized based on market cap like large cap, mid cap, small cap, etc. However, small cases are built on theme or idea like rural demand, great Indian middle class, etc. Although mutual funds also have the theme-based investing option. Risk versus return vary from mutual fund to mutual fund and small case to small case. For example, if you want to invest in blue chip stocks, then you will have large cap mutual funds which are relatively less volatile. Likewise, in small case, you have got options like low risk smart beta small case which essentially invest in large cap companies. In terms of return, again there is no guarantee that small case would beat mutual funds or mutual fund would beat small case. It would depend from mutual fund to mutual fund and small case to small case. In terms of cost, mutual funds have expense ratio, whereas small case cost would vary from broker to broker. For example, if you invest in direct mutual fund, then you would have to pay an expense ratio of 0.5% to 1% depending upon the mutual fund scheme, and index fund also have lower expense ratio. Whereas you invest in a small case via Zerodha, then you need to pay rupees 100 plus 18% GST and then the individual cost of each stock buy and sell in the small case every time you invest your money. Both rebalances the portfolio periodically. So if we conclude, we can say that small case is a middle ground between stock and mutual fund. Rather than owning individual stock, you own a small case which is a bouquet of stock based on a theme or idea. It gives you direct ownership of the stock unlike mutual fund where you own the units without direct ownership of stocks. Moreover, the biggest differentiator is the theme or idea, which is the basis of portfolio of small case, whereas mutual fund categorization is mainly based on market cap. This is more fancier way to invest in stock market, which could attract new generations of investor. So in this video, we investigated fintech company Smallcase technology and Smallcase investing. I hope you enjoyed watching the video and learned some new stuff. I spent a lot of time and energy to research about it, and I hope you will like the video and share it with your friends. This would encourage me to come up with more informative content in the future.